Good day, doctor. We are presenter from Group 6. Our group members are Chen Kai, Tae Chen, Eunice Willian, which is me, Chao Jian, and Dang Wang Sen. We will discuss the following question based on 10 selected companies from the energy and plantation industry. Now, I will pass to the first presenter.
Hello everyone, my name is Dang Wang Seng, metric number 2777888. I will present about the effectiveness of management in generating sales from the company operating asset. There are 10 companies has been chosen to be evaluated between 2015 and 2021. According to the table 1, Zaya Tiasa Holiday Berhas has the highest account receivable turnover ratio in 2021, which is 18.8152. This indicates that its collection strategies are effective and that its clients are reliable payer of bill on time. As a result, Jaya Tiasa Holiday Berhas has the most effectiveness management in terms of generating sales from the company operating when compared to other companies. Based on table 2, we can see that Boss State Plantation has the lowest ratio in 2021, which is 19. This shows that Boss State Plantation customers are more timely in making payment and that is effective at collecting their receivable. As a result, Boss State Plantation has the most effectiveness management in terms of generating sales from the company operating when compared to other companies. According to Table 3, Kimron Resources has the highest ratio in 2021, which was 28.2899. This shows that the Kimron Resources product is in high demand and sell quickly, leading to decreased inventory management costs and increased profitability. Thus, Kimlong Resources has the most effectiveness management in terms of generating sales from the company operating when compared to other companies. Following that, we can see in Table 4, the FGV Holding perhaps has the higher ratio of 59.5647 in 2021, indicating that FGV Holding perhaps pay its creator and supplier on time. And as a result, FGV Holding perhaps has the most effectiveness management in terms of generating sales from the company operating when compared to other companies.
Good day, doctor, and my fellow friends. My name is Jin Kai with metric number 27883. Now, I will continue with part 2, the disaggregate measure of asset turnover affect a company return on net operating assets. According to the data shown in the slide, the regression model accounts for 0.516 of the R-square value, indicating a significant relationship. For the ANOVA, the significant value of this ratio is 0.000, means it has a lower probability than 0.05. Which is considered significant. However, the F ratio was 8.132, which is an acceptable value because an effective model for the F ratio will have more than one F ratio. Next, the coefficient table from the slide shows the extent to which the independent variable influence the dependent variable and the strength of the connection between them. It's indicated the company return on net operating assets is impacted by the turnover of its long-term operating assets and account receivables. The data also shows that the long-term operating asset turnover significant value is 0.006 and the account receivable turnover significant value is 0.040 respectively. In contrast, the beta coefficient is negative 0.055 and negative 0.649, which is considered negative. Based on the data, when one unit increase in the turnover of account receivable and long-term operating asset would result in a 0.055 and 0.649 reduction in return on net operating assets. That's all from me. I will pass it to the next presenter.
Hi doctor, my name is Denson and my check number is 279041. Now I will continue the question 3, which is credit analysis. Credit analysis is the process of determining the ability of a company to repay their debt obligations. To determine the credit analysis of these 10 companies, we use liquidity ratios and solvency ratios to evaluate their capacity to repay the debts. Firstly is the current ratio. The highest average current ratios from 2015 to 2021 is Kimlong Resources, which is 4.11, while the lowest average current ratios is Rebuna Sawit Berhad, which is 0.18. The advantage of current ratios is help to show that how liquid a firm is. Okay. Next is quick ratios. Genting Plantation has the highest average quick ratios of 3.2941 and Ribuna Sawit Berhad has the lowest average quick ratios of 0.1182. Organizations should aim for a ratios of 1 or above, showing that they have enough liquid assets to cover all their short-term obligations. Then the highest average account receivable turnover ratios is Hengyun Refining Company, which is 62, while the lowest average account receivable turnover ratios is Kim Long Resources and Ribunan Sawit Berhad, which is 0.03. Okay, so it means that the Kim Long Resources and Ribunan Sawit Berhad are more effective in collecting the debts, while Hengyun Refining Companies has the lower efficiencies in collecting the debts from 2015 to 2021. Okay, next, the highest average inventory turnover ratios is Dialog Group Berhad, which is 23.08 times, while the lowest average inventory turnover ratios is Jasa Holding Berhad, which is 4.93 times. Okay, therefore, it means that the sales of Dialog Group Berhad are the strongest among these 10 companies from 2015 to 2021. Then based on the graph, it shows that the highest average days to sales inventory ratios is IOI Corporation Berhad, which is 76.31, and the lowest average days to sales inventory ratios is Dialog Group Berhad, which is 17.47. So it means that the Dialog Group Berhad used the shortest time to clear its inventory, while IOI Corporation Berhad takes the longer durations to clear its stocks from 2015 to 2021. Okay, next. The highest average days purchased in account payable ratios is Dialog Group Berhad, which is 133.67, and the lowest average days purchased in account payable ratios is FGV Holding Berhad, which is 10.31. So it means that the liquidity of Dialog Group Berhad is the best, but the trustworthiness of FGV Holding Berhad is the best because it used the shortest time to pay for its debt from 2015 to 2021. That's all from me. I will pass to the next presenter. Thank you.
I'm Chavijan, number metric 277686. Next, the highest average account payable turnover ratio is 81.54 times, which is Hengyuan Refining Company, and the lowest is 2.94 times, which is Dialog Group. So it means that Hengyuan Refining pays its supplier with the highest level of efficiency, while the Dialog Group pay the lowest level to its supplier from 2015 to 2021. Then on the cash flow ratio graph, Ribohan Sawit Berhad has the lowest average cash flow ratio at 0.05, and Kim Long Resources has the greatest, which is 1.3. Since only Kim Long Resources cash flow ratio is higher than 1, so we can conclude that only this company has produced enough cash to cover its current liability from 2015 to 2021. Next, I will continue with the solvency ratio. Based on the graph, the highest average total debt to total capital ratio is 0.4879, which is Ribohan Sawit Berhad, and the lowest average is 0.0458 by Kim Long Resources. As a result, we know that Ribohan Sawit Berhad has a highest risk of insolvency because its debt as a percentage of total capital is the highest among these 10 companies from 2015 to 2020. Next, Kim Long Resources has the greatest average total debt to equity capital ratio at 0.0547, while FGV Holding Berhad has the lowest average at 1.0197. A company is preferable to have a lower average total debt to equity capital ratio, since this shows the company has less debt on its balance sheet. So Kim Long Resources has the lowest balance sheet of the 10 corporations from 2015 to 2021. Finally, the graph shows that Kim Long Resources has the lowest average debt to asset ratio, which is 0.0393, and Ribohan Sawit Berhad has the highest average debt assets ratio, which is 0.4121. Since all the ratios are smaller than 1, it is clear from the graph that all of the companies mentioned above have more asset than debt. However, Kimbo Resources has the best potential of repaying its debt since it has the lowest debt to asset ratio among the 10 companies from 2015 to
Good day,
2020.
doctor. My name is Eunice William and my metric number is 277202. I will continue present the factor affecting the company earning per share and price to earning ratio. This table is a linear regression analysis that examines the relationship between independent and dependent variable that will influence factor in earning per share and price to earning ratio of selected company. There are 6 independent variables, which is tangibility, productivity, profitability, current ratio, to-being skill ratio, and capital structure. The table shows a model summary of the relationship between earning per share and price to earning ratio with the variable. According to the model summary for earning per share, the R square is recorded at 0.335, while the PE ratio model summary recorded is R square at 0.312. Next is the table about the regression analysis result of earning per share and the price to earning ratio with the independent variable. According to the result of the regression coefficient calculation, earning per share and PE ratio is a dependent variable are negatively correlated with capital structure. This can be seen that there are negative standardized beta value charted in capital structure with negative 0.417 in earning per share result and negative 0.433 in PE ratio. For the result of the regression coefficient calculation above, tangibility obtained a value of negative 0.1x3 that show a negative relationship in earning per share, and PE ratio with a negative beta value at negative 0.354. There is a negative correlation between tangibility and earning per share because the capital structure is negatively correlated with earning per share. Since the PE ratio has earning per share as the denominator, so tangibility is negatively related to the PE ratio. Furthermore, earning per share is positively correlated with productivity as its beta value is recorded at 0.352, but earning per share is negatively correlated with profitability as its beta value is recorded at negative 0.311. Also for PE ratio, it has a positive result with productivity at a positive beta value recorded as 0.708, and it shows negatively correlated with profitability with a negative beta value recorded at negative 0.166. Apart from that, the current ratio shows that there is a positive relationship between earning per share, which recorded the beta value at 0.124, but the current ratio shows a negative correlation in PE ratio as it has a negative beta value at negative 0.138. Moreover, to-being skill ratio shows a negative correlation in earning per share, which the beta value is negative 0.188. However, it is a positive correlation in PE ratio as the beta value recorded at 0.088. That's all from our group. Thank you.